This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Nigel. Morning, guys.
Hi, morning. It's a Tuesday morning, but I'm getting this Friday feeling, right?
It is a Friday feeling, but there's some confusion about the holiday, Nigel, right? I mean, you were saying, Nimesh was pointing out that maybe the holiday moves from Wednesday to Thursday. I don't want to...
Oh, is it? We haven't got any official communication, but, schools and all actually are shut on Thursday.
Across India, everyone's celebrating Bakri Eid on Thursday. It's just that the market calendar and the holidays were decided at the beginning of the year, and they decided to give it on Wednesday. And the same thing happened, remember, on Holi also? Mumbai celebrated Holi on another day, while rest of India celebrated, I think, a day later or a day earlier.
I'm hoping it doesn't move. I've got a plan this evening, so it'll have to get cancelled.
And given the way the monsoons progress, it's, I think, perfect to just sit at home and enjoy your cup of tea in the morning.
As we start a lengthy day, right? I mean, anyway, I mean, let's just quickly tell you what you need to know as we begin another trading session, a new session this morning. So it's not all bad from where we left off yesterday, but it's not very positive from where we will pick up from overnight. So the Nifty yesterday once again successfully defended the 20-day moving average. And this is a level which is important from short-term, medium-term kind of reversal point of view. We got to it, defended it, and then closed above it. Friday, for example, we closed about 2 or 3 points above it, and yesterday was a bit more not decisive, but a bit better. We ended about 20, 25 points up on the day. I'll get back to levels in a bit, but overnight, things are looking a little weakish. So S&P is down 0.5%, the Nasdaq is down about 1.16%. The broader market, the Russell, is actually outperformed, but it's flat. I mean, but slightly higher. That's a small cap part of the market out there in the US. We were talking about, and by the way, where did the pressure in the US come from? Those 7 names. We were talking about S&P 493 being flat for the year and the rest of the 7 large cap tech stocks being up massively, some 50-55%. That's where the pressure is starting to appear over the last couple of days. So, keep an eye out on that. But it's an extremely peculiar kind of market in the US because the rally's been driven by these 7 names. And now, I mean, a little bit of the pullback is also being driven by these 7 names. So how do you read it? That's the big kind of talking point. Now, with the Nifty yesterday defending the 20-day moving average successfully, the question is, do we start, right away a up move or will we kind of consolidate a little bit more? And I think the way the market moves from here will tell you a lot about what it wants to do. Even when we were at the all-time highs, it was a very feeble, weakish kind of move higher, very indecisive. There was no flourish, no momentum. I think momentum is the most important thing, which was missing even as we got to within that 1 point of the all-time high. So I think watch for price signals in terms of how the market behaves whether with momentum or without momentum, and I think that will give you the answer. But I think you can correlate that with levels as well. So the 61.8% reach, okay, let me just get to the lows first. The low yesterday was 18,646. First, there is the 20-day moving average. And then the low yesterday, which is 18,646, has to be defended. I think that becomes a bit of a short-term support level, which the market must not break below. On the upside, the fall from almost the all-time high to yesterday's low, the 61.8% retracement stands at 18,794, almost 18,800 or so. And I think that becomes the level on the upside to take out if momentum starts to come back into this market. Bank Nifty traded sideways yesterday, not very much by way of cues, but it's also not broken its 40-day exponential moving average. It's broken the 20-day, but not the 40-day. So that level for the Bank Nifty is 43,511. And if that goes roughly, it's not exactly 43,000, but for all practical purposes, it is. Those are the 2 support levels on the downside. We closed at 43,600 plus. In trade yesterday. On the way up, the recent high of 44,042 becomes important to take out, which of course we've been putting out for a while. Strong momentum in broader markets yesterday, and I think that has to be said because last week mid caps and small caps looked a little shaky, a little wobbly. They were down about 1.5% for the week, and yesterday they were up 0.9 and 0.6%. A lot of action in the broader markets, which I think When Nifty is down or sideways and broader markets doing what they are, it doesn't feel like the market is not doing anything or it is quiet. I mean, it's still, you would be qualified to be called a vibrant kind of market. And that's the kind of session that we had yesterday. 18,735, once again, a more or less flattish kind of start is what the SGX is indicating that we will open with. Rima.
Hi, so the SGX Nifty is flat. The Asian markets are mixed today. So Hang Seng has rebounded after 5 days of losses. The Hang Seng index is up 1.5%, but Nikkei continues to see profit booking after the sparkling rally that it's had over the last couple of months. The Japanese index is currently down close to about 0.8%. For our own market, today is the penultimate day for June series trading. So if you want to trade the expiry, today is actually T-1. In terms of the June series performance, it's been fantastic. The benchmark index is up 2%, the mid-cap index is up 6%, the small-cap index has rallied 7.5% so far in the June series. We've also got the Fin Nifty expiry, considering it's a Tuesday. Large blocks in secondary market sales continue. So today you've got an Aditya Birla QIP and about a 30 lakh share sale in Sapphire Foods. In terms of primary market action, Idea Forge, which opened yesterday, remember the drone manufacturing company with a 50% market share, solid subscription of 3.7 times on day one, largely coming in from retail and the H&I book. The QIB portion was subscribed about 1 time. And you also have Cyient DLM. It's a subsidiary of the IT company Cyient, but this is an electronic manufacturing company which gets more than 50% of its revenues from aerospace and defense. So EMS, aerospace, defense, all the words that the market's currently like, and this IPO will be opening up for subscription today.
Well, Rima, yesterday in the latter half of trade, we did see a bump up from the day's low. I remember closing well, we more or less flattish, but we ended closer around the 18,700 odd mark. But the most heartening fact about yesterday was the mid-cap and the small-cap indices, after a few days of a bit of a lull, they made a comeback in yesterday's trading session. So there was outperformance from the broader markets. I like that, and that should be a focus area as well. The cash market volumes, well, the DIs, some of them seem to have gone on a vacation because of the truncated week, maybe. Because the volumes yesterday, the participation was 20% lower than the average that we've seen in June 2023 so far. What are the FIs doing in the F&O market? Well, they added some mild longs. The country remained net long on the index. They bought more calls than puts, while they wrote equivalent amount of calls as well as puts, which brings us to the levels. Now, the Nifty Bank took support at around the 50 DMA, so you're banking on that holding that 43,450 to around 43,500 odd mark. The Nifty, well, we have expiry, the monthly expiry that will play out in the next few days. And for now, the positioning is such that 18,575, beg your pardon, is your support level, while on the upside, you have 18,800 as a bit of a resistance zone. So that's the broad level you're looking at. And I say that because you're looking at the options data, 18,750 call, 18,600 put. Well, both of them were very active in yesterday's trading session. The levels you're looking at, 20 DMA, yes, on the downside, but even if that breaches, the last few days, the Nifty has bounced off this 18,647 odd mark. So that's going to be a line in the sand. That's the important mark you're looking at. The second half of trade will belong to the Nifty Financial Services Index, because you have the weekly expiry that will play out. And the broad range that you're looking at, going by the options data, is around 19,460 on the downside, while on the upside, you're looking at around 19,590 odd, because the two most active options with a fair bit of open interest are up for you on the screen. That's 19,550 call, as well as the 19,500 put. Now, the SGX Nifty is suggesting a 30-35 point bump up. I think at some point of time, you get an intraday dip, or maybe initially itself, you get the intraday dip. So don't chase the open. But if you get the intraday dip, maybe you look to buy the index, and also you keep a stop loss at around that 18,647. Because that's the mark from where we have bounced the last few sessions.
Well, so that's basically the setup as you need to know it. 18,736. It's a flattish kind of higher, but more or less, quite kind of open that we will get this morning. Before we go any further, let's quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets around the globe. Arvind Sanger is going to be joining us at Geosphere Capital Management. We'll discuss the global sort of setup and scene with him. Our research team gets you the top 10 stocks for the day that you need to watch out for. And Nishchal Maheshwari will talk fundamentals and stocks and sectors and themes that he's watching out for a little later after that.
On equities then, Rhythm Desai of Morgan Stanley says peaking short-term rates, improving trade and earning strength appears to offer a better setup for stocks. That said, sources of volatility include India's election cycle, weather, global growth, geopolitics, energy prices, and global liquidity. India is up 9% in both absolute and relative terms in USD terms in Q2 so far. While relative valuations remain rich and India's low beta status implies it underperforms an EM bull market, India offers much stronger relative earnings growth and is likely to benefit from a trough in terms of the real gap with the US.
Okay, well, that's basically the view coming in on equities. But on the rupee, Abhishek Goenka of IFA Global says the low volatility phase and the dollar-rupee pair continues. Extremely narrow ranges are being traded in spot. Intraday, the central bank has been mopping up dollars aggressively around the 81.9 to a dollar level, thereby putting a firm floor. He expects the dollar-rupee pair to trade between 81.6 to 82.9 to the dollar over the coming few weeks, with the downside break eventually likely in line with their view of a weaker dollar.
On the bonds then, Ajay Magnolia of JM Financial says in the absence of any fresh triggers, domestic markets are trading in a thin band. Fresh conflict in Russia-Ukraine can have some impact on yields. Liquidity remains in surplus. State elections later today can expect good bidding. He expects the 10-year benchmark yield to trade in a range of 7.04 to 7.08%.
All right, well, we have a lot of stock-specific action to track for you. We get to that in just a wee bit from now, but let's run you through the list for the time being. We're looking at AB Capital, Sapphire Food, Parag Milk Foods, BLS Internationals, Axis Gates Tech, Naveen Fluorine, and City Union Bank. Their stocks on the back of positive news flow that you've seen. And you have Avas Finances, Rolex Rings, and ICICI Prudential. They could be reacting to negative news flow.
Okay, well, Arvind Sanger is now joining us, Managing Partner at Geosphere Capital Management. Arvind, good to have you with us here. Thanks very much for your time. Will the next big move or biggish kind of move come from the US? Because it's been a very narrow rally. Either that broadens out or we see a meaningful pullback. You think either of those two will pan out, or you think we'll get, we'll continue in the fashion that we have for most of this year?
I think, look, the US had a strong rally in the first quarter. The tech stocks even, and NASDAQ even more than the S&P. And, second quarter has been a little bit less strong, but still, I think the markets are kind of in this confused state because there is the hope that Goldilocks, Fed has paused, inflation will come down naturally, and they may just have to do one more in July and they'll be done. That's the Goldilocks scenario. The negative scenario that has now started to come to the fore is if you look at the inflation data that came out of the UK last week, and the fact that the central bank, Bank of England, had to do 50 basis points, surprisingly, to fight inflation, and European inflation too seems somewhat more persistent. The concern is that if the US has the same persistence of inflation, then Goldilocks may not be possible, and Fed may have to keep slamming on the brakes till something breaks, no pun intended. So that's the negative. So the market, I think, has had a good rally. At this point, we need greater clarity on how the inflation versus Fed aggressiveness is going to play out, and the economic fundamentals. So far, the economic fundamentals are holding up a lot better than many of us expected with the kind of rate increases that the Fed has done so far.
So in a bit of a tug of war, which is creating that confused state. But I think come July, Arvind, we'll get the earnings season in the United States and even back home in India. And then we'll have a greater picture of how the second half of the year is going to pan out. But, talking about India, the overarching theme in the last 2 months has been the slew of block deals, the sales by promoters or large marquee investors in company. Every single day we're hearing of a block deal where a large chunk has been offloaded by an investor or a promoter. It's been lapped up, aggressively. But nonetheless, this has been a big trend. How would you read it?
I don't read it too negatively. Obviously, when insiders are selling, you can always assume that they know something that we don't. But I think they're just being prudent because they're also seeing the global uncertainty and therefore taking a little bit of chips off the table. So, I think clearly it's never positive, let's be clear. But is it an overwhelming negative that they know something bad is coming? I don't think so. I think the real issue for India is going to be, look, the monsoons are off to a bad start. is inflation going to reappear? And if inflation is going to reappear, is the market too sanguine about the rate cycle, about the inflation outlook, and therefore, could you see RBI having to go back, to raising rates again? There are some uncertainties that are India specific that we have to worry about. But outside of that monsoon fear, I think the economic fundamentals in India, certainly for the June quarter earnings, are very solid. And hopefully, if inflation does not play a spoiler, then the rest of the year should continue to look good.
All right. Hi, Arvind. Good morning. Arvind, what are you factoring in terms of action from the Fed? The Goldilocks scenario will be that they do one more rate hike and then they, pause. But what are you factoring? Do you think they will do one more and that's it?
It's so data dependent. I definitely think that, July is leaning towards doing a rate hike, but there's some data that comes out between now and the July Fed meeting that could swing it if there's a big surprise. But my assumption is we get a 25 basis point Fed hike in July. After that, my crystal ball, like most of the observers, is fuzzy. My fear is that this inflation does not go away gently into the night, and that without a meaningful economic slowdown, inflation is not going to go away. So I'm frankly still not a believer in Goldilocks. So my expectation is either the economy is going to have some serious problems, or the Fed is going to have to keep going, because while the good side inflation has been under control, the services side inflation, I think, is going to prove to be far stickier. And that's why my concern is that Fed might have to go one or two more times, including July, and that could put the economy at risk.
In this kind of scenario which you're pointing out, and you earlier kind of referred to the fact that, markets are in a confused state of mind, the Indian market is pretty much at all-time highs, right? And for example, we had Jonathan Garner of Morgan Stanley saying that Asian emerging markets are largely in a bull market. I mean, technically speaking, they're off some 25% from last October lows. Can they continue to do very well, especially India, Arvind? Do you have a firm view?
Yeah, I think again, I'm watching the inflation data closely. That can be a near-term negative. It doesn't fundamentally change the story. I think the fundamental story of India still looks very solid to us. And markets will trade around a little bit. But I think if I take between now and the end of the fiscal year or 2 or 3 year view, I feel quite comfortable that Indian markets have solid tailwinds because they're one of the best growth stories in the world. And I think that growth it has solid underpinnings that are less dependent. They're not independent, but they're less dependent on a minor inflation in the West. And that's what my expectation in the West is if we do get minor recession in the West. And that's my assumption, that if we do get a recession, which I think is still a high probability, that's going to be a mild recession. And the Indian markets, therefore, growth is one of the better ones because it's much more domestically driven, where its growth on a relative basis will be better. And some of those recession risks are reflected in Indian IT and other export-oriented companies. So I think we're in better shape in India than many other markets around the world.
Arvind, thank you very much for joining in. Look forward to a chat another day. Enjoy the rest of your day. Get into a break. On the other side, our list of top stocks is lined up next. Welcome back. Tuesday morning, the SGX 50 is up 30 points, which should take the Nifty above levels of 18,700, at least in opening trade. The mid-caps outperformed yesterday. That's a space that you'll need to watch. But what about individual stocks? This is CNBC-TV18's list of top stocks for the day. Our entire research team is standing by. And on top, we've got Nimesh with Aditya Birla Capital and Sapphire India. Hi.
Hi, morning, Rima. So this, fundraising spree continues. First, I'll go with AB Capital. The book was launched for a QIP last evening. They're looking to raise close to 1750 crore, which means close to $213 million. The indicative price is between 170 to 176, and the stock rallied in the last 30 minutes of trade yesterday and ended at 181. I believe the demand is quite strong, and one-time book is already covered by the larger FI. So I'll go with green because there is strong demand, and the NBFC will raise close to 1750 crores via QIP. So that's the first one. The second is Sapphire Foods. Even in Sapphire, there was a book launched last evening. A leading FI investor who owns 4.8% equity is looking to sell out its entire stake. So it's a clean out trade. And the book was launched last evening. The indicative price there is between 1345 to 1391, which means up to 3% discount. My sense is the block should happen in the block window. If that goes through, then again Sapphire will open in the green. It ended 2% higher yesterday, but I believe even in Sapphire, the demand is quite strong.
Okay, thank you very much for that. Let me take it off from there. BLS International should be on your radar. This is a stock which has rallied 90% because it is a play on India's tourism. They provide visa services. But the news right now is that the company's subsidiary, BLS E-Services, which does not provide visa services, but they provide consumer-centric services like KYC in rural India. In hinterlands, they will provide your PAN card services, Aadhaar services. So the company is planning to do an IPO of the subsidiary, BLS E-Services, where the company holds about 70% stake. Axis Gates Technology is another company on our radar. The company has announced to the exchanges that they have completed refinancing of their existing debt of 210 crore. This debt was taken on for the acquisition of Mistral Solutions. Now that they have refinanced this debt, the borrowing cost, the interest cost will come down by more than 400 basis points per year. And finally, Navin Fluorine should be on your radar. Board meet on Friday where they will consider a fundraise. We're talking about fundraise. There is some more on the anvil. Abhishek joins in with City Union Bank and ICICI Pru Life.
Well, Rima, City Union Bank has taken a board approval to raise funds up to 500 crore via QIP. This is an enabling resolution which almost every other lender takes at the start of the year. If they raise at CMP, the Tier 1 ratio can improve almost by 1.5% as per my calculation. ICICI Pru is the other stock on radar. They have got a show cause notice from DGGI. This is for not paying tax of about 492 crores pertaining to a period between July 22 to July 12 to about July 22. So the matter relates to an industry-wide issue of tax input credit that they had taken earlier. The company believes that it had availed eligible input GST credit in compliance with all the provision under the CGST Act. So company shall take appropriate steps in due course of time, and this matter will be contested going ahead as well by the company. Back to you.
All right. Well, Abhishek, thanks very much for that. And we'll come back to ICICI Pru a little later with more. But let's talk about more stocks with news flow. Vivek is standing by with that list. Vivek, morning.
Well, good morning. Quite a few block deals that happened in the session yesterday. First on our list, Aavas Financials. Yesterday, small cap world fund sold almost 7.7 lakh shares. That is almost 1% of the total equity. They held almost 8% at the end of the March quarter. Amongst the buyers, Society Generale picked up almost 3.96 lakh shares over there. Parag Milfoods, the interesting trend where, 6 cents India Opportunities Fund continued to purchase shares over here. Almost 0.7% stake that they bought yesterday. At the end of the March quarter, the 6 cents Opportunity, Fund 2 as well as 3 held almost 3.5%. But, what's more interesting is the fact that from June 11th onwards, almost every day, they've been picking up some stake in the company. Watch out for Rolex rings as well. Yesterday I did see a large block deal happen over there. One of the promoters, Ashok Kumar Madeka, sold almost 0.9% stake in the company. He held 3.17% stake at the end of the March quarter.
Thank you very much for that. Let's do a quick recap then of the top stocks. Stocks with positive news flow are Aditya Birla Capital, Sapphire Foods, Parag Milk Foods, BLS International, Axis Gates, Navin Fluorine, City Union Bank. Stocks with negative news flow are Aavas Financiers, Rolex rings, and ICICI Prudential.
Okay, all right. Well, those are all the top stocks you look at. But Abhishek is staying still on with us because he wants to run us through some brokerage notes for the day. Abhishek?
Well, Nigel, to begin with, we have Macquarie on Paytm. They've downgraded the stock to neutral from outperformance, so it's a double downgrade, and the target price is at rupees 800. So there has been sharp outperformance, which drives their downgrade, is what they have mentioned in their note. Current year so far, Paytm is up almost 59%, and Nifty is up only 3%. So they are saying that there is an overhand in terms of selling from Ant Financial, which owns around 25%, and JFS related announcement in RL AGM could be another negative trigger, is what they have mentioned in their note. Now we also have CLSA on ICICI Pru. They have a buy rating, target price being raised to about 700 per share. They say that the company is focusing on APE growth and multiple levers, which augurs well, and ICICI Bank is bottoming out. Wallet share gains possible in other bank partners could also aid in growth. So investment in agency to help along with product mix diversification, and they expect to see industry growth levels with optional of higher growth also for ICICI Pru. We also have Jefferies on Piramal Enterprise. They have a buy recommendation. The target price has been increased to 1,025 from earlier target price of 895 per share. The management suggests that provisions should stabilize as wholesale one stress has been recognized by the company. So in retail, the growth is strong and it should drive a 15% loan growth over FY23 to 26. So recovery in profitability will be gradual based on elevated OPEX, which will continue for the company. And the stake sale in Shriram Finance is slightly value positive, but can also lift earnings. So at 0.6 times FY24 price to book value, the valuations do make it a favorable risk reward scenario. Back to you.
All right, Abhishek, thanks very much for that. So those are some calls coming in from sell-side brokers. Manisha is now joining in with a roundup of what's happening in the commodity space. Manisha, morning.
Morning. Thank you for that, Prashant. Well, I'll start with the crude oil prices, which are trading firm on political instability in Russia, but the demand concerns from China keeping the prices in check. For the month of June, we've seen 5.5% decline come in for the crude prices, and this is going to be a second straight month that you are seeing prices ending in the negative. I also want to talk about the metal prices, where the wait for the China stimulus just goes longer. The manufacturing sector has shown weaker numbers, and there is support needed for that. The new yuan loans in the May also totaled at 1.3 trillion. Markets were anticipating 1.6 trillion. So you have a bit of a disappointment there as well. And then it is higher rate hikes from central banks, all of that weighing on. So copper is off its 6-week highs, and the prices have seen a decline of 4% for the month of June. Steel is off its 2-week highs. Iron ore prices trading in the negative for the week and the month as well. And same is the case with zinc and aluminum. So another month which is not really ending positive for many of these metals.
Okay, thank you very much for that. Let's take a short break. Up next, we'll invite Nishal Maheshwari of Centrum Broking. He'll join in to talk about individual stock analysis. We'll also connect with Mahesh Palawat of SkyMed Weather Services for a monsoon check.
Welcome back. You're tuned into Bazaar Morning Call. Hope you're having a good morning. Well, for starters, the SJX is suggesting a bit of green, but there are plenty of stocks to discuss. So let's get straight to that. Nishal Maheshwari, CEO, Institutional Equities and Advisory at Centrum Broking, joins us on the show. Hi, Nishal. Good morning. Thanks so much for joining in. Well, Nishal, I wanted to ask you about Shree Cement before we ask you about some of the other stocks of the day. And that one's pulled back, close to around 10% in the last 1 week. The problem is that there is an IT survey that's going on. We don't know the contents yet of that, but there are some reports that suggest that it could be a substantial number, though the management says that it is unlikely to be the case, and they're waiting for clarity from the IT officials. How would you approach the stock? It used to be 30,000 at its peak. It's corrected a fair bit, and it trades at premium valuations. Your view at around this 23,000 odd mark?
Morning, Nigel. I think it's difficult to speculate what's going to come out of the IT situation. I think, but historically, I think a company has been pretty clean and do not expect much to happen out of this raid. Having said that, I think Shree Cement has always traded at a fairly steep premium to the market, and it continues to do so. So I think this correction should be looked at as buying opportunity. It has always traded well, basically. I think the volumes are going to be good. This quarter is going to be good, basically, the June quarter for the cement companies, cement industry as a whole, and I think Shree Cement in particular. So I think this could be a good opportunity to accumulate.
Nishal, morning. One of the newspapers indicated that Lupin is planning some potential restructuring. They're looking to carve out their API business to unlock potential value. And they went on to say that how Glenmark had also undertaken a similar exercise. So Lupin will now eventually get split into the formulation business and the API business. That's what the, at least some of the newspapers seem to be suggesting. How would you read this development for Lupin if it happens?
Morning, Rima. I'm not a big fan of trying to split the company and making it two and trying to unlock value. I think that is basically for the stock markets, for splitting the company and unlocking values, basically. But I think if there is value, I think investors are very smart. They'll find it. Whether it is within the company and outside, and I think market discounts it fairly well. So yes, I think Glenmark has done it. I think a lot more companies will try and do it, but we have to understand, I think API has a discounted value to the generics or to the domestic market, and that's the way it is going to get traded. So some unlocking of value is good, but I'm not a fan of that.
Okay. Got it. Nishal, morning, Prashant here. NBFCs, we're speaking with the management of 5-Star a little later. That's a South-based, lend to sort of the lower strata, the economic strata, and very small ticket size. In a similar kind of way, some of these home finance companies like Home First, Aptus, etc. Aptus, we saw a very large block deal. Other segments, credit access, these have been doing well. And many have been pointing out that maybe as compared to banks, these are in a better place with rates at some point which will start to peter off, etc. Any thoughts? What do you like here?
So I think NBFC as a space has underperformed for a long time. And I think in the last 3-4 years, most of them have cleaned up their books. And NBFC as a sector, basically, yes, during the early part or during the late 20s, 2020 is what I'm saying, basically. They had their advantage, basically, over the banks. At that point in time, banks were in a slightly messy situation. But at the moment, what I see here is basically that the banks cleaned up books, and the excess of banks is outstanding, basically. We look at all large banks, basically, they have got access to everywhere. So I'm saying most of the NBFCs, if you want to take a call on them, so it's high risk and high reward kind of a situation, because I think all the normal lending opportunities, banks are everywhere. So one has to be cognizant of it, basically, that when they are getting into this kind of NBFCs, basically, it will be definitely higher risk and definitely higher reward. But given that the situation at the moment in the economy is very good, so one can look at a few of these. Our top pick remains to be in the SFBs, and we like Equitas out there. We like Ujjivan and Suryodaya in that order.
Equitas, Ujjivan and Suryodaya. Nishal, thank you very much for that. But do stay on. We've got an important conversation. The much-awaited monsoon is finally here. Monsoon, in fact, has now covered 80% of India. And with that, the monsoon deficiency is down to 23% versus 47% earlier. IMD has also predicted heavy to very heavy rainfall in several states till the 30th of June. According to the Weather Department, active monsoon conditions are likely to continue over to east central, northwest and west of India during the next 4 to 5 days. So brace yourself for some good rains over the next few days. Mahesh Palawat, the Vice President of Meteorology and Climate Change at SkyMed Weather Services, now joins us on the show now. Mr. Palawat, morning and thank you very much for joining in. What is the prognosis according to you over the next few days? Do you think we will be able to recover the deficiency that we had in the first half of the month of June? And do you continue to maintain your assessment that overall we are likely to see below normal monsoon at 94% of LPA?
Yes, we think that now the deficiency, which is as of now 23%, will come down to around 15% in next 4 to 5 days, the remaining parts of, say, June. And we expect that rains will be very heavy over central parts of the country, particularly Vidarbha, Marathwada and parts of Madhya Pradesh. And East Rajasthan will also witness decent rainfall. Western parts of Uttar Pradesh, Punjab, parts of Punjab, Haryana, Delhi, Uttarakhand and Himachal Pradesh. These areas will be witnessing moderate to heavy showers. Moreover, the rain activities will be heavy over Konkan and Goa, including Mumbai and suburbs, for another 48 hours. Thereafter, rain activity will continue, but in lesser intensity. So we can say entire country is going to receive decent rainfall for at least first week of July. The deficiency will be around 15% during month of June, by end of June. And first 10 days seems to be promising for rainfall across the country, and monsoon will progress further over western parts of Rajasthan as well. And the El Nino impact will be seen by later part of July, and there may be some deficiency in rain fall over many parts of the country, but it will be not be a drought-like condition. So we maintain our forecast of below normal rain, that is 94% of LPO, because El Nino impact will be there, and Madden-Julian oscillation will also not going to impact, or you can say enhance rainfall in the month of July. We do not foresee the MJO impact. And moreover, another factor is that Indian Ocean Dipole. It is also positive, but in the threshold value of positive, it is not very positive, so it will not help the monsoon rains. Yeah.
All right. All right. Good morning, Mr. Palawat. At least good to hear that deficiency for the month of June will come down from the mid-20s to around 15%. A couple of questions. Then you said below normal monsoon is what you all are factoring in. 94%, that's for the entire monsoon season?
Yes, between June 1 and September 30, that is long period average. It will be 94% of long period average.
Got it. And we're talking about June being in a deficit, but June as a percentage of the total monsoon period contributes how much? A very small portion, right?
Yes, because the overall monsoon rains are around 17 centimeter in June and around 17 centimeter in September. But July and August, they are the rainiest month, that is around 31 to 32 centimeter. So we have to wait and see the impact of El Nino during these two rainiest months.
Yeah. Rule of thumb 20, 30, 30 and 20, right? July to June to September. Sir, just a quick word, whether, do you have a sense of how sowing, etc. is going on? Key crops across key regions?
Yeah, now, although sowing has been delayed by a week or two over many parts of the country, but yes, now it has picked up pace, and because the farmers were anticipating the decent rainfall, we have also predicted, IMD also predicted that rainfall will pick up after this first half of June. over many parts of the country. Despite the delayed onset of monsoon has progressed very well in the last 2 to 3 days and covered most part of the country. And now rain will continue, so sowing will help. And we do not expect any crop damage in recent, next 15 to 20 days. And the water which is essential for the crops to sustain will be available to farmers.
Yeah. Okay, well, thanks very much, Mr. Palawat. Appreciate you joining in with that quick update, and we'll sort of lean on you for more insights and speak to you through the course of the monsoon season to assess the progress. Thanks very much for joining us this morning. We will take a very quick break here. There's 15 minutes to go for the market, the pre-open session. Anuj will be here with how he's seeing markets, our F&O and technical experts coming up as well in just a bit. Okay, welcome back. The SGX is up on your screen. 25 points, 18,727 is where we are at. Anuj is here with what he's making of things. Anuj, morning.
Morning, Prashant and Nigel. Good cues today. Monsoons covered almost 80% of India now, and the deficiency is down to 23%. You're just having this conversation on the channel, I guess, some time back. Also, yesterday's session has soothed some nerves, especially given how the mid-caps behaved after 2 days of fall. Also, the Nifty respected 20-day exponential moving average on the way down, but faced resistance at 10-day exponential moving average. In fact, yesterday's high and low were exactly 20 and 10-day exponential moving average. For today, Nifty IT could be very interesting because it showed some signs of bottom yesterday, and Infosys has the potential to make higher low, and that could lead the recovery. There's news also with Infosys, so I think that was something that I'll be tracking. The The bank nifty has been defending lows, but it's struggling at the highs. Today's fin nifty expiry, the last 4 expiries have been good for the market, the fin nifty expiries. So could be very interesting today. On the nifty, the range I'm working with, first range is 18,646 to 18,722, which is yesterday's high and low. Also the 20 and 10-day exponential moving average. And the bigger range going by the options data is 18,575 to 18,830. On the bank nifty, the first range is 43,541 to 43,773, which is yesterday's range. And of course, bigger range going by the options data is 43,385 to 43,881. As I said, I'll keep an eye on Infosys and HDFC Bank today.
Okay, all right. Thanks a lot for that, Anuj. Well, let's get back to our chat that we are having with Nishal Maheshwari. Nishal, some of these smaller names, well, they have done very, very well. Parag Milk, I'm not sure whether or not you have a view out there. There's been buying by a notable fund or, Nikhil Bora's fund, I think, so has been buying big time, 6 cents. Yeah, they have bought close to 8 lakh shares as well. Any view on that name?
So, Nigel, we do not have coverage on that, so I will not be able to give any formal view. But I think the stock is corrected quite a bit, and yes. It was a value play basically, and I think that's why you're finding funds, basically long-term investors getting into the stock. Given that the monsoon is also now getting back on track, so I think the input cost for Parag is obviously the milk. So I think the cost may come down basically as far as that is concerned. So a good stock at these prices.
Any thoughts? Do you have any view on Landmark, the premium car dealership? There was some block and some large investors got in. Stock had a bit of a flip-flop, started higher by about 4%, 5% and ended down by that much. Any thoughts?
So, yes, I definitely have thoughts, though we do not have coverage there basically, but I have done some work. And interestingly, I think Landmark has done well. But if you look at the car dealerships across the world, Prashant, I think they trade pretty well. Most of the car dealerships, if you go across Europe or US, they are actually at a premium to the OEMs. Interestingly, in India, it's not so. Basically, people are still looking at the car dealerships compared to Maruti, and Maruti still trades at a good premium to that. But I see that changing here. Basically, there are several car dealerships out here, basically, and I think they are not done well. I think maybe a couple of them listed also. But Landmark obviously has been different because it's mostly premium segment. And the premium segment we've seen basically that continues to do well even in a downturn. But the economy is turning around, then I believe more car dealerships should get listed and do well.
Nishal, do stay on. We want to get in a few technical trading ideas as well. So let me invite the experts on the show. We've got Mitesh Thakkar and Shrikant Chauhan of Kotak Securities with us now. Mitesh, let me start with you. Yesterday was a pretty range-bound, volatile session, but we are respecting that range of 20-day moving average on the way down and 10-day moving average on the way up. Is there a trade on the Nifty today, or would you just still keep away?
Good morning, Rima. I think, we've maintained that the markets will be sluggish and range while the movement looks very prominent in the last few days. I think about a week back, I think, we started saying that the volatility indicators are dipping and therefore the market must move out of trending movement to choppy and a range kind of movement. I think in that sense, on the downside, this level of 18,650, 640 assumes a lot of importance. If that breaks, then I think a 100, 150 point correction could start or a pullback to the bigger averages. But importantly, I think, that could also give a jerk to the indicators on the volatility side, which are now turning flat. So if that picks up, then we might prepare for some kind of a 150 point kind of decline, but maybe even a larger decline in the indices. But otherwise, it's a market which is not going anywhere. In fact, even the intraday movement, the intraday range is also shrinking. So it's a market which is kind of contracting, but maybe with Thursday coming up, the final expiry, maybe, on Thursday, we might see some kind of a directional jerk coming to this.
Shrikant, morning. What about you? I mean, what are you doing on the index and what are your stocks?
Good morning, Prashant. Yeah, I think, markets are very clearly in the range. It is not breaking the levels of 18,630 and on the higher side, 18,760. So till the markets are not crossing these levels, we are not going to see any major activity. But yes, in case if we see any pullback towards 18,800, then the strategy should be to look for reducing long positions because finally we are of the view that it is heading for the levels of 18,500 or maybe 400 in the near term. For stock specific, I think yes, there are few stocks which have which are doing really well. I mean to say mid cap IT companies. Whenever they are correcting, they are reversing back sharply. And yesterday also we saw good amount of activity in stocks like Persistent, Naukri, and a few other companies. So in that we like Naukri, which is like trading somewhere close to 4,400 levels. So from there, from here, I'm just from 4,400, the stock can easily move to the levels of 4,600 or 4,650. So it's a buy at current levels with a stop loss close to 4,340. And the other stock which we like is Jindal Steel and Power, which is currently around 567. It is very close to its long-term averages. From here, again, the stock can move to 600 or 620. So it's a buy at current levels with a stop loss close to 555.
Okay, all right. Thanks for that, Shrikant. Mitesh, you as well have some pending picks?
Yeah. For me, Nigel, it's a mix of buy and sell calls. Good morning. I have a buy on Cipla. In fact, Pharma is one space which is showing good strength in the market, which is turned sideways and contracting. And we've had buys on Dr. Reddy's earlier. Cipla is now a buy with a stop at 1,004 for targets of 1,055. The second buy call is in Godrej Properties, which I would recommend taking long positions with a stop at 1512 for targets of around 1590. Have a couple of sell calls. Voltas on a mild pullback, let's say around 762, 763. A short can be attempted with a stop at 777 for targets of 730. And Bosch is the final sell call. Keep a stop at 18,875. Look for targets around 18,000 to begin with.
Mitesh, any thoughts on Mazgaon? On Friday sold off some 5-6%, but yesterday strong move again. How is it looking?
Prashant, disclaimer here, it's a part of my portfolio, so I have vested interest, but otherwise it's a stock, which remains very strong. In fact, we did see some kind of selling from Wednesday to Friday, but that happened after the stock rallied from 750 to about 1,300 and now, gave a pullback to its 10-day average and a mild correction to about 1,150 odd levels. I think in the long term, the charts look very promising to me. I am looking at targets of around 1,750, 1,800 if you give it about a few months. So I think a 10% kind of a decline would always be a buying opportunity for me.
Nishal, you at Centrum Broking, you all would have chatted with a lot of brokerages over the last 2 months to get feedback, the demand on the ground in terms of revenues and margins. Any key sectors or companies which stand out in their commentary according to you? And especially where the commentary has differed from what they had to tell us in the month of April during their Q4 numbers. Just want to understand what has changed on the ground when you spoke to the corporates over the last 2 months.
So I think one thing which has come very starkly actually is that the retail demand in April and May has not actually pulled back. And it seems to be the same situation as far as June is concerned. So the rural demand, the retail demand across sectors, and it's not alone one sector, across sectors, footwear, clothes, everywhere basically the retail demand seems to be waning. So that has been a bit of a surprise to us basically because in general the economy is doing well. But somehow the demand doesn't seem to be coming back at the moment, and most of the, especially the lower end, and most of the corporates are still talking about either a rural issue or inflation. So these are the two things which have been highlighted by the corporates. Volumes for the FMCG also, I think, is going to be disappointing.
Okay. Thank you very much for providing that color. So retail demand has not improved, rural demand has not improved in the month of May, April, May, and perhaps even in June. That's what the feedback is. So this is going to affect all the apparel, the textiles, the footwear companies too, consumer durables also. Nishal, thank you very much for joining in. Need to slip into a very short break. When we come back, we'll have the pre-opening rates.
Welcome back. This is Open Exchange, and we're coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, just a few minutes to get into pre-open, so let's get in a couple of derivative strategies. Manoj Muralidharan joins us to help us out with just that. Morning, Manoj. How are you approaching trade today?
Good morning, Nigel. Nigel, we understand that, being a truncated week and because the VIX is as low as 11%, so this is an opportunity where a lot of option sellers are coming in. So needless to say, the FIR desk has justified that with 11,000 odd crores figure in the index option. So that is majorly into the put option, but yes, around, let's say a 45% goes into a call writing as well. So Nifty, because we have strong put writing at 18,650, we would say that a dip towards 18,650 intraday becomes a good level to go long on Nifty. That can reward with 130, 140 points around 18,760, 780 becomes the resistance for the day. So that's a basic trade for today. Even if you go with the bank Nifty, we believe the resistance will be somewhere close to 43,900. There is good amount of call writing there, and we believe that is a pivot of weighted average price where there is some short holds which has been going from June to July. So the indices would pan in this way, but stock specific, we are strictly looking into delivery based buying along with the derivative buildup because this has been a range bound or a bit lackluster market. So M&M tops the list because yesterday we've seen good long buildup along with delivery. So we believe 1390 is a good level to go long, 1375 as a stop loss and 1410 as a target. Pharma, for the first time in the last 3 to 5 sessions, have seen some positive buyers, and I believe there is a possibility that July might be a good reflection on that. So stock specific, Sun Pharma stocks around 970 becomes a good level to go long. Stop loss should be 955 on that, and we are expecting a target close to 1010 on that.
Okay, thank you very much for that. Let's get to our momentumizer stock for the day. Vivek joins in. Vivek?
Well, good morning. Very interesting name, that we are tracking today. The company is LG Balakrishnan and Brothers. The company is in the auto ancillary space. The company has seen significant momentum as far as, the stock movement itself is concerned. Stock is trading, comfortably above the 50, 100 and 200 DMA. Up till, last week, the stock was a bit of an underperformer. But post last week, there has been a sharp surge along with a good pickup in trading volumes as well. The stock is up almost 23% in the week gone by. And even in yesterday's trading session, stock was higher. For the last 4 out of the last 5 trading sessions, the stock has been in the green. So what's actually changed? Last week, the company actually held an analyst meet after a long time, and they gave very strong targets. The company is targeting double-digit revenue growth for FY24. Along with that, targeting 10% volume growth with sustainable EBITDA margins in the range of 15 to 17%. Also, one of the reasons why the stock was underperforming earlier was the fact that, market analysts believe that the company would not have too much of a say when it came to the EV space, but the company actually allayed investor concerns, and they said that within the electric vehicle space, the content per vehicle that they would be enjoying would be much larger than what they were enjoying, in the internal combustion engine, and that has given another fillip as far as analyst estimates are concerned.
Okay, well, stocks moved up from what, Vivek, thank you very much for that. 1800, middle of June. From $800 in the middle of June, it's moved up to about 1,050, 1,053 kind of level. So this is, it's in a pretty sharp run up. Month to date, it is up 32% or so, and culminating in terms of what the management is telling analysts, as Vivek pointed out. Param Desai is research analyst at Prabhudas Lilladher, and he's joining us now with his call on hospitals. Prabhudas is quite bullish on the hospital space. Thanks very much for joining us, Param. Good morning, Prashant here. Let's get straight down to which are the names where you think which are best placed from a risk-reward perspective from that space, hospital space.
Yeah, so we are structurally positive in the space. If you see in the last 2 years, the profitability has gone up pretty sharply. The company which had done a lot of capex intensity in the 15 to 19, the benefit of that was started getting visible in the last 2 years or so. We believe that earnings momentum will sustain going forward. Most of these guys have lined up their capacity addition in the next 4 to 5 years. The current revenue per patient is also been going up at a very steady pace. More important, I think the case mix and the payer mix are also going up in the favor of the companies. So we see the earnings momentum to sustain. We are positive on the space. Our preferred picks in the space is Apollo Hospital, Max, and Fortis.
Which are the hospitals where we are likely to see a big jump or an improvement in occupancy in, say, an FY24, according to you?
Yeah, so most of the companies say have not reached to its optimum utilization level. Like companies like Apollo, Fortis, they are still hovering around 64, 67% of occupancy levels. If you see pre-COVID, they were touching their occupancy to 72, 73%. There is still room of improvement in terms of occupancy in the current level. So FY24, we will see further improvement in the occupancy. And post FY24, most of these guys have outlined the new capacity additions, which will further basically scale up and improve their say occupancy on a long-term basis.
Hi, Param. Good morning. Nigel on this side. Param, I wanted to ask you about Aster DM. You know, that was the big stock that's got actually re-rated. It was hovering in 150, 130, 180 odd. It's moved to around 300 rupees. Now, the street is waiting by for maybe there could be a deal in the offing. What's your view on the stock at current levels? It still trades at a bit of a discount, but how do you approach it?
Yes, if you see the last 2 years, that India business has done exceptionally well. Their profitability in India business have gone up pretty sharply, say 150, 160 crore of EBITDA to around 400 crore in the last 2-3 years. And along with that, GCC business has also recovered post the COVID. And as you rightly mentioned, there is a deal in the offing. So they intend to monetize the GCC part of the business, which the currently market is not giving a good valuation currently. And if you see some of the businesses in GC do trade at a higher multiple than what Aster DM currently is trading at. So they are able to monetize it at a reasonably good valuation. And whatever cash inflow comes in from that transaction, that is likely to get distributed in the form of dividends and will be utilized for the capex part for the India part of the business. So that will re-rate the stock, and we see upside post the stake sale whenever it happens in the GCC, and that should happen in the next 3 to 6 months. That's what the management has been guiding.
Param, on Fortis, which you mentioned is one of the names that you like, will its performance at par with other hospitals depend on the resolution of what will happen with IHH? Anything on that, or you think it'll continue to do well irrespective of that?
So obviously the case there is an overhang on the case. The timing of that is still remains uncertain. But even on operational parameters, if you see that currently the hospital margins are at 17% versus 20, 22, 25% what some of the peers are reporting. They are taking certain steps. They are doing a lot of brownfield expansion in the next, say, 2 to 3 years, which will aid further operating leverage. So we see there is a catch-up in the margins in case of Fortis in line with some of the peers. I think that will drive the stock performance, and we remain very constructive on the margin improvement in case of Fortis. And if whenever the case resolution happens, that is over and above the positivity.
Any thoughts on Krishna Institute of Medical Sciences? Is that a stock that you track, Para?
Yes, we do cover that stock, and we have.
General Atlantic has been consistently selling, and they've been a marquee holder in Kim's for a long while now. They sold in December, I think they sold in Jan, they sold a little bit in February, again they've sold in June. So they have been lowering their stake. Would that worry you?
I think they what I do recollect is they have now just finally 1 or 2% stake. It's almost they are now out of the picture. So the supply overhang is now pretty much sorted. I think operationally, even Kim's is exceptionally done in the last, say, 2 years. Even they are adding their capacity in the next, say, 3 to 4 years. They are following the cluster-based approach. They are very strong in the Andhra and Telangana. They are now basically moving this cluster-based approach to Maharashtra and Karnataka. They have done some 2-3 good transactions, have tied with the local guy over there. And we see that event playing out in the next 2-3 years. They're almost adding 1,500 beds on a base of around, say, 4,000 in the next, say, 3-4 years. That will continue to drive the growth. So we remain very positive on the name.
Param, you don't have coverage on things like MedPlus, etc., right?
We do not cover MedPlus.
All right, got it. Param, thanks very much for joining us. Good speaking with you. Appreciate you joining in with that perspective. That's the hospital's space. Well, Mitesh is with us with what he wants you to do. 9-10 calls. Mitesh, morning. Again, what do you have?
Yeah, Prashant, good morning. Let's say Cipla, I think the pharma space being showing a lot of resilience. This is the call. Buy with the stop at 1,004 for targets of 1,055.
Any thoughts, Mitesh, on names like, the big momentum names, which is, what we saw yesterday, HCC, these are smaller names, but did very well. HCC won big volumes, by the way, on Friday, some of the highest ever. Spark is another one which saw very large volume-led gains yesterday. You mentioned Mazgaon, but another one is Garden Reach. Again, very small shipyard, but big volumes and big price action. HCC, Spark and Garden Reach.
So Garden Reach is something I have not looked at for a long time, Prashant, so unable to comment over there. But Spark managed to get past the 200-day average. Yes, the price and volume action is very positive. Assuming that this momentum sustains, I think the stock has got a good chance to head toward levels of around 240 to about 255, that kind of a range. So that's a buy. I think traders can look at buying into this one with the stop below 200. HCC also is showing very promising patterns. The only thing which is pending is the levels of 22-23. The stock had peaked out there in December 22. I think once it clears this level, then it's heading towards 27 plus.
Okay, thank you very much for that. Let's get to Nimesh for the standout brokerage stock of the day. Nimesh.
Hi, Rima. So today's standout is in Cholamandalam Finance. A rare downgrade coming for the stock. So Citi has today downgraded the stock to neutral from buy, but they've raised the target price to 1200. Now, they believe that the re-rating on the stock has been too fast and too soon. In fact, the scale-up in the non-vehicle business has driven the outperformance on the stock. So the stock is up more than 35% in the last 3 months and more than 50% in the last 6 months, and has outperformed all the peers as well. In fact, after the re-rating, the stock is now trading at peak multiples of close to 4.2 times FY25 price to book and nearly 21 times price to earning. In fact, the valuation catch-up has been, Citi believes that the valuation catch-up has been too fast for a growth expectation of 25 to 30% AUM growth, 2.5 to 3% of cost of assets, nearly 1% of credit growth, and close to ROE of close to more than 22%. So while the stock has done well, the numbers look good. The business fundamentals are quite strong, but Citi believes that the re-rating has been too fast and too soon, and hence a marginal downgrade to neutral from buy. But they've raised the PAT estimates by 2 to 3% for FY24 and FY25. So the business fundamentals are good, but the recent run-up has led to a bit of a downgrading to neutral from buy on Chola Finance.
A rare downgrade indeed. Nimesh, thanks so much for filling us in with that call. Well, Abhishek is joining us to tell us about Paytm, and there's a downgrade there as well, this time around from Macquarie. Abhishek, tell us more.
Well, Macquarie has almost got it right every time they have given a call on Paytm. Whether at the time of IPO they had a sell rating and then they upgraded, and now they have further downgraded to neutral from buy. So it's almost a double downgrade that you are seeing. Target price remains same at about rupees 800. They say that the sharp outperformance actually drives their downgrade to neutral from outperformance. So current year so far Paytm is up 59%, while Nifty is up 3%. So Ant Financial is looking to sell 25% stake, which could be an overhang, and as well as the fact that Jio Financial Services related announcement in RIL AGM could be another negative trigger for the stock. We also have Aditya Birla Capital. They are looking for a fundraise of about rupees 1,750 crores via QIP. The floor price is around rupees 176, which is a discount of 3% to yesterday's closing. Current capitalization of the company is around 16.4%, and proceeds of the fundraise will be used to meet the capitalization of the company and its insurance subsidiaries as well. Back to you.
Abhishek, thanks very much for that. Mitesh is still with us. Mitesh, this is completely news-driven, but any levels on Shree Cements which would come in handy? Was down 10% at one point, ended 5% off the lows.
So I think, Prashant, two things. One, it had a big gap down. Typically, big gap downs will see follow-through movements, and it also managed to close below the 200 average. My sense is that the previous pivot, which was the low on the 27th of January, which was closer to about 21,850 levels, I think that is the first target. But logically, this is heading towards 20,674, which is where stock had a big consolidation way back in September 22.
Got it. We don't talk about Gillette very often, but seems to have caught a bit of momentum last 2 or 3 days now. Mitesh, anything on this one?
Yes, I think, the way this chart is shaped up, I think, again, it started a strong medium-term uptrend, and I would be aggressive in giving targets over here. 5,500 is my first target over here. But I think eventually the stock could test the 52-week highs of 6,000 plus as well. So very, very strong movement over here. And this should see follow-through to around 5,500. Expect some profit.
Okay, just a few seconds left for markets to open. It's going to be a quietly positive start. The SGX 50 was suggesting a gain of about 30-40 points, pull up the Nifty level, and it should be well above 18,700, inching towards 18,750, which has acted as a bit of a resistance for our market because therein lies the 10-day moving average, the Nifty 10-day moving average. Will we be able to conquer it? The broader market momentum will also be tracked very closely. The Nifty opening, pre-open, is currently higher by close to about 57 odd points, and the stocks that you should keep on your radar, which is suggesting a smart opening, at least in pre-opening, include many of the IT names. Okay, there goes the bell, and the first rate on the Nifty is very close to 18,750. 18,750 has been hit, and the Nifty is higher by about 50 to 55 points. The sensex too has straight away opened with a gain of about 180 points, so it's a 0.3% rally on the benchmark indices. The mid-caps looks like they're going to outperform yet again. The mid-cap index has a rally of close to about 0.5%. The banks are moving in step. The Nifty Bank too has a gain of 0.3%, mirroring the rally that we're seeing in the benchmark indices. The advanced decline ratio is currently well in favor of the gaining side. We've got 5 stocks in the green for 1 in the red. In terms of the large cap movers, autos are doing well. Tata Motors, Eicher Motors higher in trade. M&M up close to about 0.7%. Remember, over the weekend, we will get the June monthly sales numbers, and there is some buying. And the fact that monsoon is now covered 80% of India is also lending some optimism. HDFC Life is the top Nifty gainer. Adani Group stocks higher in trade. Asian Paints is up nearly 1%. Nestle is up nearly 0.1, nearly about 1%. So consumer names continue to get bid up. IT is seeing some buying, so Infosys is opened in the green. And in the banking pack, I think the name which stands out perhaps is Axis Bank, with a gain of close to about 0.5%. On the losing side, Titan is a bit subdued. You've got some profit booking visible in Hero MotoCorp. Did well yesterday, but currently it's down close to about 0.1%. But mid-caps are holding fort.
Well, that's right, Rima. And a few of them, should come up for you on the screen. You have Sapphire. Sources have told us that WWD, Ruby, they'll be selling the entire 30 lakh shares that they held in the company via the block. That's happened, so the stock is up close to around 2%. Selling or buying out of the way. Axis Gates Tech, they've completed refinancing of its existing debt of close to around 210 crores. That is what will lead to a lot of interest saving. So that stock has been moving from circuit to circuit. It's up close to around 5% yet again. Naveen Fluorine, the board will be considering a fundraise on June 30th, so that stock should be in focus as well. And Parag Milk, as we told you earlier, 6 cents India, they've bought close to around 8 lakh shares. They've been consistently buying for the past quarter or so. Pull up Rolex Rings. Let's see how that stock's doing. The promoter entity sold close to around 1.5 lakh shares in the entity. So let's pull up that one. Let's see how that one's doing in early morning trade. More or less flattish as we speak. The Nifty, though, for the first few minutes at least, is holding on to that gap up start. So that's pretty good going. Prashant, what else?
Well, it's a very, very decent start. 18,760 is where we are at on the index at this point in time. What we'll do is we'll have more stocks, etc., come up in a bit from now as markets start to pick up pace, but nothing to complain at all. Some of the big movers are at the bottom of the screen. Andrew Holland is joining us, Chief Executive Officer at Defenders Capital Public Markets Alternate Strategies. Andrew, good to have you with us here. Thank you very much for your time. How are you placed, Andrew? End of last week we saw a bit of a wobble, but yesterday's mid-cap and small-cap outperformance, this morning the start that we have. Generally, I don't think there's very much reason to be very negative. You can feel a little uncomfortable about the pace of the move. Some of the technical, if you look at some quant and technical indicators, there have been some divergences, etc. Things like RSIs have been very elevated, but that's part of parcel. But what do you make of it near term?
Near term, it's I think we're all complacent. To be honest, I think I've been, as you know, I've been more constructive on the market. So please, I'm not trying to be overly negative here at the moment. But that was based on a number of factors. One, that the Fed, having gone on pause, would look to reduce rates by the end of the year. RBI had the opportunity to reduce rates in October because I think Asia has that opportunity, given commodity prices are falling. So, if that's your base case, then that's just been, maybe kind of delayed somewhat because of what the Federal Reserve has said, what the Bank of England is doing, what's happening in Europe. But we're all looking at those Goldilocks scenarios that it's okay. And I'm not sure it is. So I'm just wondering if this complacency is just a little bit worrying in that there's nothing that we're seeing any untoward or kind of unintended consequences of keeping rates higher for longer. I think that's going to, that's something that just worries me in the very short term. But if markets do fall, then I'd be buyer on those dips. But I just feel that markets look globally a bit tired with no real catalyst, and the only real catalyst is either higher rates and slowing growth as we're seeing in Europe.
Is there a risk that the U.S. markets don't do anything at all? The rally up until now was driven by those magnificent 7 stocks, the technology stocks, and you are seeing signs of fatigue emerging there. And you've got a couple of downgrades as well. So even the sell-side analysts are not very constructive on these tech stocks after the kind of rally. Goldman Sachs yesterday downgraded Tesla. They say the stock has run up 108% on a year-to-date basis. You had UBS, which downgraded Alphabet, and they're saying that, well, all these benefits from generative AI is going to take some time, and they see limited upside from current levels. So UBS downgraded Alphabet. So if these tech stocks, which drove the rally up until now, are showing some signs of fatigue, do you think there is a possibility that the U.S. stocks either stay at these levels or perhaps decline?
No, it's a great point you make, and if you kind of think about the fact that the market has there been driven by 7 to 10 stocks, and the underlying market below that is virtually kind of flat to down. If you look at the Russell 2000, and if the economy is falling, so if these stocks were not there to hold the market up and they start falling, there's nothing underneath it. Really, underneath those 7 to 10 stocks to stop the markets from falling, because obviously, the banking sector would kind of would take a bit of a hit because of the recession and higher rates. So all of these factors, could be reversed from the positives that we've seen over the last 3 months. I think one of the interesting things is that, and I've said it too, and so happy to be wrong, is that we've expected this market to be kind of volatile. Because of all the different events that we've been seeing, but it hasn't really been, the volatility has not been there. So, given, as I said, the complacency where it is, the VIX where it is, both here and in the US, then maybe there's something to shake that complacency at some point, whether it's this week, next week, or in a month's time. We'll have to wait and see. But I still think that's the main factor that's worrying me. But you're right. Without those 7 to 10 stocks, I think the markets in the US would be a lot lower than they are today.
Hi, Andrew. Good morning. Nigel on this side. Andrew, how have you changed your positioning with regard to the long-short ratio? Have you tweaked it a little bit post this recent run?
Yeah, no, we've been fortunately been very flexible in the way we've been trying to kind of maneuver around the kind of what I would say is really a flat market. It's not as though we're racing ahead. I mean, the market's at what 1% this month so far, and 4% for the year. So it's not, it's really the action's been in the small and mid caps, and the underlying themes which we talked about many times, which is where you're going to make the most money. It's not going to be for the index at the moment.
Andrew, what about a couple of themes that you have liked? Defense as well as renewables. We'll have a chat with one of the defense makers in the next few minutes as well. How much of that good news has played out? You've been positive, I think, on both those two spaces. Do you think that it's time for some consolidation, though these stories continue to look good for the next few years?
But it's not a couple of years. I think it's the next 5 to 10 years. So yes, you will get times when some of those stocks will have their pause in terms of just take into account that ratings or valuations have moved a little bit ahead of expectations in the short term. The problem I find on the defence sector, and it's something which doesn't help in terms of valuing companies, is that the orders are very lumpy and you'll never know when they're going to come in. But obviously, in my view, this is over the next 2 to 3 years is going to be two sectors which will continue to race ahead, and therefore you need to be involved in some of those stocks, although it's limited on the defence side.
Just a few names I want to highlight from the broader market in terms of what's happening. Look at HDFC Life. It's the top volume traded gainer across the board. So it's coming up with about a 3.5% gain at this point in time. Look at, there you go, on your screen. ICICI Pru, of course, is the other one where CLSA has put out a call. They think they've upped their target price quite aggressively. So that's the other one. Stocks in the recent past have done well. Look at MRPL, which is up about 3.5%. Stocks at about, 80 rupees, coming up with large volumes. BLS is up about 3%. That's the passport services company. So almost 200. Sapphire Foods is up 1.5%. We highlighted that. Amrutanjan is coming up with a 10%, 11% gain. Usually doesn't come up at all, but big volumes in that one. Look at that, 2 lakh shares on the NSE and 11% move. KPI Green continues its extraordinary run. Saregama has been very strong last couple of days. Saregama is up another 2% or so. You've got Railtel, which is up 4%. Thyrocare is up 5%. Some of these diagnostic companies yesterday popped up, Metropolis, etc. Equitas Bank is up about 3%, 3.5%, and MGL is up about 3% as well. So this is, the broader universe. Market breadth is exceedingly positive. Some 5:1 in favor of advances is what we have. ICICI Securities is down 2%. The stock ended off the highs, but still very strong yesterday. The delisting was the trigger. 2% lower right now. And Mazgaon Dock, which shot up, is down 1%. I mean, small pullback. We were talking about Parag Milk as another one. It's down 2% this morning at about 135 or so. HCC was another big mover from yesterday. That's down about 1.25%. Rima, so it's in the broader market, overwhelmingly positive kind of start.
Andrew, any other sector that you are keeping on your watch list where you think tailwinds are emerging or they are getting to attractive valuations? You've still not dipped your toes in it, but you are pretty close to evaluating a buy call. Are there any sectors like that on your watch list right now?
4 or 5 months ago was obviously the kind of more kind of new age companies, the kind of Paytms of this world, Nikes, but we did some homework on that, and some of them have actually kind of moved ahead quite well. I think for a number of them though, there's still a lot of competition just emerging. So it's something which I still feel it's not apart from one company which I can't name, apart from one company which is now becoming more profitable. I think the others have a more intense competition, which is worrying me. So, but no new themes. I think the themes that we have are plenty enough to make money in. I think the only one which I'm still kind of grappling with in terms of finding the kind of stocks in what I would call kind of be able to invest heavily is the electronics industry, and I think that's something which I will continue to monitor to see who else is moving into this industry over the next 1 year, because that's where I think you're going to make a lot of money, both because those companies will have huge revenues both domestically and from exports. So that's a sector which I want to get into. I'm just finding it difficult to find the right companies.
Okay, all right. Well, thanks a lot, Andrew, for stopping by and filling us in with your take on the markets and individual sectors. Looking forward to having a chat with you in the near future. Wishing you a good day as well. Well, let's move on. Let's get our first corporate on the show. REC, that's the first corporate. Well, in terms of news, the company will be providing close to around 3,000 crores financial assistance to Bangalore Metro Rail Corporation for their phase 2. Mr. Vivek Kumar, the chairman and managing director at REC, joins us on the show to let us know more about this development as well as how is the year shaping up. Well, good morning, sir. Thanks so much for speaking to us here at CNBC-TV18. Well, you're looking at various financing options, so give us some clarity. We're close to a quarter into this year. What is the AUM growth you're looking at and the targeted NIMs as well for FY24? Now, in quarter 4, FY23, the NIMs had fallen to around 3.3%. That was a disappointment, but your indications were that it will improve from here on. So give us both those two numbers.
Our administrative ministry, that is Ministry of Power, has allowed us to diversify into non-power sector, infrastructure and logistics. Keeping this business strategy, we are pursuing this infrastructure logistics sector. And government has allowed us that 1/3 of our loan book could be from the non-power infrastructure and logistics. Keeping that in the perspective, last year we had sanctioned Mumbai Metro projects, MMRDA, for about 16,000 crore. Recently, our board has approved financing of Bangalore Metro Rail Corporation for extension of 2 corridors of the phase 1, that is East-West corridor and North-South corridor. And we are also taking up 2 new lines. This is definitely going to improve the connectivity and decongest traffic in the most populous portion of the Bangalore city.
Okay, all right. So that's good news, sir. Yes, go ahead.
You also asked about this, our asset under management and net interest margin. Let me first take up this net interest margin. Last year, our net interest margin was about 3.38%, which is quite good as per industry standard. But however, 1/3 of our borrowings are at market floating interest rate. And as you are aware, the last year, this interest had gone up. That's why our net interest margin were affected. But going forward, now we expect that borrowing cost will go down and our net interest margin will improve. With regard to our asset under management, our total outstanding loan as on 31st March 2023 was about 4,35,000 crore, which was a significant improvement of 13% on year-on-year basis over the last year. And going forward, we are targeting to take up infrastructure projects as well as energy transition initiatives. And the next 7 years, by the year 2030, we are targeting that our loan book will increase to about 10 lakh crore.
All right. You know, we have got the broader time horizon, sir, but in the near term, you said NIMs will improve. What will they improve to? Point number 1. And AUM growth from this 4.35 lakh crore, where does it head in FY24?
Yeah, in FY24, we are targeting that it will at least touch 4,80,000 crore.
Okay.
And net interest margin will also improve, but it will depend on how the borrowing costs are going down.
Mr. Kumar, good morning. Prashant here. This 10 lakh crore number, this is PFC, REC both, right? By 2030. No, this is only REC. It is only REC. Okay.
REC's loan book is 4,35,000 crore as on 31st March 2023. And we are targeting by the year 2030, next 7 years, our loan book will grow up to about 10 lakh crore.
Got it. This, the non-power, the exposure which you're allowed to go up to 1/3, where does it stand now? Are you, do you have enough room there?
Yes. Last year, we had sanctioned, total project cost was about 2,68,000 crore. Out of that, about 85,000 crore was in infrastructure and logistics sector. But as you know that after sanctioning, the disbursement of loan takes some time. Our total disbursement of loan last year was about 96,000 crore.
Right. No, I'm saying as a total as a percentage of AUM, where does the non-power portfolio stand at?
Right now, the percentage is small. Out of 4,35,000, it is about 1% only.
Okay.
But it will grow in the near future.
So that's where bulk of the growth will come from on the way to this 10 lakh crore number that you spoke about.
Bulk of this growth will come from energy transition initiative. Right now, Government of India has announced that they are targeting about 500 gigawatt from installed capacity from non-fossil fuel sources. That will entail an investment about minimum 15 lakh crore in next 7 years. And we are targeting about 20% of that market share. So we are targeting that for green projects will be financed roughly about 3 lakh crore in the next 7 years.
So do you think by 2030, which is when you will have an AUM of 10 lakh crore, your infrastructure, logistics or non-power exposure can hit that upper limit of 30%?
Yes.
Or do you think... Okay, got that. And currently it's only at 1%.
Yes.
And what are the margins, sir, that you enjoy on power versus non-power or spreads?
We are giving very competitive margin in infrastructure, but conventional generation, these margins are same as that of the non-power infrastructure sector.
Okay, so in 2030, what would your NIMs look like? Just want to understand structurally, as your non-power exposure goes up from current 1% all the way up to 30%, will this provide a margin tailwind for you, or will this depress margins?
It will increase our margin. NIMs will increase to be more than 3.5%.
Okay.
Okay, all right.
And so how is asset quality for you right now?
Asset quality has improved quite substantially, particularly the green project that we are targeting. We are emphasizing on the asset quality. Our net NPA has come down to about 1.01% in the last financial year, and we were able to resolve about 6 NPA projects amounting to about 4,800 crore. In the current financial year also, we are planning to resolve about 9 stressed assets amounting to about 7,000 to 8,000 crore, and we intend to become net NPA zero company by the end of 2 years, by say 2025.
Oh, okay. All right. So, the outstanding dues of DISCOMs, they have come down by around 30% the last 1 year or so. This is since the Power Ministry has introduced LPS rule, that's the late payment surcharge. I think the number has come down from around 1.38 lakh crore to around 93,000. That's as of May. Could you give us an updated number, and how do you see the trajectory going ahead? It's already come down by 32%. Do you see it coming down further?
Yes. This late payment surcharge scheme brought by Ministry of Power is a path-breaking reform initiative, and this DISCOM dues will be reduced to zero by the year 2026. As you have already pointed out, that this has been reduction about 30% in the DISCOM dues, and by the end of FY24, this DISCOM dues will go down by about 40-45%, about 50%.
Just a quick point on the power segment itself. You spoke about energy transition, where there will be a lot of spending which will be required. You said you will spend about plan to lend about 3 lakh crores, right?
Yes.
Towards that over the next many years. There was an approach paper by CERC which was put out recently for the next couple of years for the power sector, power tariff resets, etc. Some have suggested that there is, plan to revive old power projects, increasing the life of those thermal power projects, basically. So, is this, the plan the plan for the mix between renewable and non-renewable? Is that still is that set, or is that still work in progress according to you? There is also some talk that we may require new thermal power plants, large thermal power plants, because we are going from power surplus to power deficits, as we saw last year, as we saw the year before last also during the summer season. So just wanted to understand the thinking on the thermal sector from here on.
Okay. As you are aware that renewable energy is intermittent in nature. In order to ensure grid stability, we need base load, that is basically coming from the coal-based thermal power plants. Going forward, as the share of renewable will increase in the total energy mix, will still require coal-based thermal power plants, but we'll have to have flexible operation of coal-based thermal power plant. Right now, the technical minimum of coal-based power plant is about 55%. If the share of renewable in the energy mix increases, we'll have to further reduce this technical minimum to say about 40%. The flexible operation of coal-based power plant is going to play a big role. As coal-based power plants are providing base load, will still require about 51,000 megawatt in the next 4 to 5 years from coal-based new power plants, which are basically coming in the brownfield projects.
Brownfield projects, I mean, basically existing expansions and extension of life of existing assets, right? So, got it. We'll leave it there, sir. Thank you very much for joining us, and the market's very excited that power financiers will do very well as some of the trends that you highlighted play out over the next many years. The energy transition, renewables is a big one, where there's going to be a lot of lending which will be required. And of course, the existing thermal capacity will also be put to use, as you explained. 157 on REC, stocks about 0.5% higher. We'll take a very quick break here. We'll be joined by the management of 5-Star Business Finance to discuss the outlook. That's another one where there's a fair bit of interest as far as markets go. A little later after that, we'll have the management of Bharat Dynamics to discuss the impact of the government's defense indigenization push, and of course what trends are for their order book and revenue trends.
Welcome back. Let's invite the next corporate on our show, and this is 5-Star Business Finance. It was a strong all-round performance for the company in Q4. The disbursements went up by 72%. The assets under management saw a 36% growth on a year-on-year basis. Nomura recently gave the stock a buy call with a target price of 750. Currently, it hovers around 660. Lakshmipati Deen Dayalan, Chairman and Managing Director at 5-Star Business Finance, is now with us on the show. Thank you very much for joining in. You provide, small business loans, housing loans, but your broad ticket size is on the lower side. Your AUM stands at 6,900 crore as of FY23. When do you think you will be able to double your AUM? Can you give us a 5-year or a 7-year projection? Where do you see the company headed by, say, 2030?
Yeah, thank you for having me. While it not be justified to talk about next 5 years, 7 years, let me give you a guidance for next 3 years that will be more apt for 5-Star. Before giving my guidance, let me say the space in which 5-Star operates, lending to shopkeeper, especially single and small and self-employed of this country, we have a long runway to serve. So that's first positive outlook that I wanted to place it before the viewers. Keeping that in mind and our strong operational performance, what we showed in September, December, March, and that continuing in the quarter of June as well. Keeping these things in mind, I can say you we will grow at 35% year-on-year growth for next 3 years. So you can do the maths and say when 5-Star can double its AUM and triple its AUM. That's the mathematical output. But I can very clearly say that we have revised our guidance from 30% to 35% year-on-year growth.
Mr. Lakshmipati, good morning. Prashant here. One of the things one constantly hears, not just about your company on the lending side, but others as well, where the ticket size is so small and the target customer is what it is, that the risk of any sort of external event impacting repayment ability, etc., is it's risky in that sense. How do you? My question, of course, we have demonstrated experience from you in terms of the numbers over, I guess, the last couple of cycles. With this 35% growth that you are projecting, will you be able to maintain it? And how do you do it? How will you do it?
Good morning, Prashant. Let me again reiterate, 5-Star is a collection-first model that I've been saying from the day in which I came into your channel. So whenever, wherever, whatever we do, we think of the collection first, because I'm a strong believer that lender excels completely from a collection side rather than the growth side. So whatever product we go, and wherever the geographies we enter, we just first look for the collection first, right? Keeping that in mind, I think 35% growth, which I've guided now, will not have any impact on our collections on quality of asset based on two metrics. One is the cash flows of our customers are becoming stronger and stronger. Yes, I agree. There was a dent in COVID period, but those are way back. Now the people are coming back with a very strong cash flows, and inflation and the rate hike, which has peaked, will not give any threat to the cash flow of our customers. Keeping these in mind, I don't think there will be any fall in the asset quality.
All right. Hi, good morning, sir. This is Nigel on this side. I think you're largely skewed towards South India. Could you tell us, as you grow at around this 35% odd, how does that skew change between South and non-South? Do you have a target in mind?
Absolutely. We have a focused target as I speak today. Five Star is a South-based NBFC. We are happy and proud to say that. Close to 95% of our disbursement and asset comes from South. But having said that, in next 2 years, our focus on North will be one of the key focus what we have that's going to drive our growth. As we speak, we have 60 branches in non-South. That will double in next 2 years. So that kind of focus that what we are intend to have. In next 3 years, this will result in 85% in South and 15% in North. So very clearly, we are focusing on non-South as well.
Okay, if you could tell us, what about cost of funds? Incremental cost of funds is coming at what rate? And that compares with, maybe the last couple of quarters. What has been your cost of borrowing? And in turn, guide us for NIMs for the coming year.
Yeah, the cost of fund always remains attractive for Five Star. I said in many of the interviews that I had with your channel, I think risk premium from the lender side has come down because of the capital that what we have on our balance sheet and the quality and profitability what we demonstrate and the rating what we got upgraded from A to AA. All put together, I think the risk premium for Five Star is coming down. We are borrowing at close to 9.5 to 9.75. That's a borrowing cost. Happy to say our cost at the book is at 10.1. So incremental borrowing at 9.75 will also bring the cost of funds in the book mathematically. Having said that, my guidance for this financial year, our NIMs and spreads will be in the similar range where we enjoy today. Our NIMs are around close to 16-17% today. It will remain in the same range.
Got it. So you operate a branch-led model, right? So as you look to grow at 35%, and you gave us an indication of how that you plan to double your branches in north of India, could you tell us on an annual basis how many branches will you be adding for the next 3 years, and what would your overall branch count rise to?
Yeah, absolutely. We are a branch-led model. Pre-COVID, we were opening close to 40-50 branches per year. Last year, we opened 70 branches plus. So we intend to repeat what we did last year. So in next 3 years, we'll be opening close to 70-80 branches year on year. Out of that, 20% will be allocated to the non-South, as I said earlier. So we will be moving from 375 branches where we closed in last March, adding a 70 to it, will be close to 450-460 branches for this financial year.
We'll leave it there, sir. Good luck. Thank you very much. There is a fair bit of interest from investors that we speak with regarding Five Star, and of course some of the other lenders in that segment as well. So good luck, and we hope to speak with you again soon. That's the management of Five Star, stocks at about 664 at this point in time. We have the defense space, which has been continuing to buzz, as we've highlighted. It's one after the other. Aerospace companies like HAL, shipyards like Mazgaon, and of course, companies like Bharat Dynamics have also been in focus. The government's big push for defense indigenization has been the underlying trigger. We have the management of Bharat Dynamics actually joining us right now. Stock's been a big winner. It's up about 50% over the last year. As per their investor meet, which was held earlier in June, they are expecting big orders and revenues to flow in post FY25. ICICI Securities, the broker, has put out a buy, and they like the name. We have Mr. P. Radhakrishna, Director, Production and Chairman and Managing Director at Bharat Dynamics, joining us right now to take some questions. So, Mr. Krishna, good morning. Great to have you with us here. Thanks very much. Prashant this side.
Good morning, Prashant.
Mr. Krishna, is Bharat Dynamics a F525 and beyond kind of story? Or will we see what's happening right now, sir? In F523, as compared to the previous year, we did see a small dip in revenues and profits as well. What is, how are things looking like in FY24? So just sort of lay it out for us in terms of contextual information. Go on.
Yeah. Basically, yes, what you said is right, and we had a slight dip in 23, and FY24 we are expecting to cross 3,200 crores, at least the minimum. That is the minimum target we have set, and we are sure that it will be going beyond that. Other than that, we are looking at 24 and 25. There will be at least minimum of 5,000 crores. And above, from 25-26, it will be beyond 5,000.
All right. Hi, sir. Good morning. Good to hear. 3,200. I recall, in FY23, you fell a little bit short of the target, but you're saying for FY24, at least 3,200 crores, we'll take that. But I believe that going ahead, by FY27, you're expecting to nearly double revenues. So do you think that by FY27, revenues will be in the vicinity of around 6,500 crores approximately, if you could tell us that? And also, what is the rough margins we should be working with in the near term? That's FY24, FY25?
See, basically 25, 26 and 25, 26, 27, we are sure that the present order book is so good, and we are confident it will cross at least 6,000 plus. And the present margins, whatever you are taking, is we are a public sector, so we'll have the margins as per the government norms.
Okay, so it's about 16.5% in FY23. Are you saying that you will you'll be around that figure when you get to 5,000 crores kind of numbers on the revenue?
Definitely, it should be maintained.
Okay. So just to clarify, you're saying that by FY27, you will be at close to around 6,000 crores, right?
Yeah, 24, 25, and 25, 26, we'll go.
Got it. And also, your last reported order book is close to around 24,000 crores. That's the number that we had. Could you give us an updated number if there is any change, and how much of that is from exports as well?
Actually, we have 20.350 crores net, and it was the gross what you have the figures. And the current export order we have is 2,600 crores. And in the near future, we are anticipating quite a good number of export orders.
Can you tell us the orders, the export orders that are in the pipeline? So currently 10% of your order book comes from exports. In the next 3 years, as your revenues jump up from 3,200 crore and double to 6,000 crore plus or minus, what would the export contribution look like given the export orders that you have in the pipeline and in hand?
Yeah, we are working with 3 to 4 foreign-friendly countries, wherein we are targeting for Akash and Astra missiles. And we are confident that in next 1 to 2 years, we'll have export orders reasonably very good quantity. Almost it will be maintained. 10% will be maintained constantly.
Sir, the Prime Minister was in the US recently, and there have been specific agreements which have been signed. Some are in the works. Have you heard anything from the ministry with regards to technology tie-ups or anything at all with regards to the visit recently?
No. As of now, no.
Okay. As of now, no. Got it.
All right. So a couple of more questions. I'm looking at a couple of brokerage notes, and they're suggesting that actually margins for this year should be in excess of 20%. Is that correct?
Yeah, it should be. Yeah, let us wait and see.
But is that the target, 20% margins?
See, basically, as per the government norms, we are fixed with some target margins, but we'll improve our productivity and process control, with which we'll try to increase the profit margins. And it should be reasonably much better than last year.
All right. Also, your working capital days, it's at around 225 days, I think, so for the past year. What kind of working capital days should we be working with for the coming year?
It will be similar to that, little more.
How much more? I mean, 230 to 40 days? Should we be working with working capital days around?
40 days will be there.
240 days.
Right. Sir, you mentioned a couple of times that you have certain restrictions on margins with the government. Could you explain that? What exactly is that?
See, the margins are fixed for most of the government orders, what we receive from the MOD, the margins are fixed. So we cannot go beyond that. They will not be giving us beyond that. But we try to improve our product profitability by improving with different product mix, and also what we'll do is we'll improve our processes and.
No, got that. Because I'm just only asking because as compared to FY23, FY22, FY23, there was a very sharp dip in margins. So when you say that margins. Due to product mix.
Yeah.
But then the product mix also is not, in a way, not in your control, right? I mean, it is what, the government asks you to make at those margins. So it may there may be big fluctuations in margins, like what we've seen between 22 and 23?
No, it will not be so much. Definitely, it will be almost similar to the previous years.
Okay.
Sir, recently the Ministry of Defence released the 4th positive indigenization list for many of the defence components. Are you aware if we are going to hear more, positive indigenization lists from the government, the Defence Ministry?
Yeah. Government is continuously working on indigenization, and few more positive indigenization lists will be likely to come. And it is an advantage to our company.
No, absolutely. But can you tell us that in the last 2 years, as these various PILs have been released, these indigenization lists, what has been the total benefit, for you? What percentage of your overall revenues can you attribute to this indigenization move by the government?
It will be at least 15 to 20% increase in our revenues because of that.
Okay, all right. Final question then, sir, you're sounding so positive. Revenue is going to double in the next few years or so. Have you heard anything about the government of India wanting to bring down their stake from around 75%? Could there be any kind of OFS on the cards?
As of now, it's the government policy. No indications of that.
No indications as yet?
Yes.
Okay. I'll take one more stabs, if you will allow me, on margins. In FY19, sir, margins were 20%. In FY22, margins were 26%. And 23, they were 15%. So, I mean, 20, 25, and then 16. What should we work with? Where do these kind of settle? What's the number?
You can go with an average.
Okay, average 20, 25, and 16. Got it. So around, I'm assuming 20% is what as analysts, etc., are expecting. Thank you very much for joining us, sir, and appreciate you joining in with that perspective. So that's the management of BDL. 3,200 crores in revenues in FY24, that is this year, as compared to about 2,800 crores, which they did in FY22. But then FY25, over 25 and 27 will be the big kicker, and they expect revenues to go up to about 6,000 odd crores by then. Stocks at about 1105, up about 1% or so. We're up 38 points, by the way. We're not up 60 as the case was earlier on in the session. But things are still looking pretty good. Market breadth has come off a little bit. It's some 3:1 as opposed to some 5:1 when we started on early in the morning. Some more names which, by the way, are coming up very strongly. Metropolis, I was talking about these diagnostic companies. Metropolis is up about 5%. And I think Thyrocare is up 6%. I can't spot Dr. Lal as yet, but these two diagnostic companies are there. With pretty strong gains. I don't know what's happening with FACT. That's Fertilizer Travancore, 7% higher, and it is a huge volume-led move that we're seeing on FACT. Time for our special segment, Charting Trends. Gautam Shah, founder and chief strategist at Goldilocks Premium Research, is joining us to take some questions. Gautam, good to have you with us here. Thanks very much for your time. Prashant this side. So chart out the trend for our viewers, Gautam. I mean, pretty much at all-time highs. And once you cross all-time highs, I guess the excitement is that there is nothing to go by, right? So in that sense, blue skies is the limit. Is that how you're looking at it, or more circumspect here?
Good morning, Prashant. Well, you have to look at markets in relative, in relative terms, because if you look at it in absolute terms, obviously Indian markets have done fabulously well. We are at lifetime highs, not just on the Nifty 50, but also on the NSE 500, the mid-cap 100. And the Nifty equal weight index. So obviously there are a lot of positives. But on a relative basis, it actually gets better, because if you compare India with the US, India with Europe, India with the rest of Asia, you'll realize that we have started to become one of the best performing markets once again. We had lost this tag sometime in December last year. For about 4 or 5 months, Indian markets underperformed the world. But thereafter, I think this rally has been spectacular. But I think, as I keep saying, and I've been maintaining this stance for the last few months, that our market has really become bottom up. It's not about the index. I know these numbers of 18,800 looks very flashy, sounds great for celebration. But in percentage terms, we haven't done anything special. Yes, we are up 2,000 points from the recent lows. But I don't think we have the ammunition to really gallop past levels of 18,900, 19,000 in a hurry. So the way I look at it, the index and the large caps are going to be quiet. They're going to stay in a range. They're not going to see much upside, maybe because they have run a little ahead of themselves, and also because world markets are in a sort of a range-bound space. But at the same time, if you look at the broader market performance, that's where the real opportunity is. So yes, markets are slightly overbought from a short-term time frame, but they will just digest that by going sideways, and there will be internal corrections from time to time, something that we saw in the 2003-2007 bull market. So the real opportunity is in the broader markets. And if you actually look at the Nifty, the mid-cap 100 divided by the Nifty, or the small-cap 100 divided by the Nifty, those charts have seen massive breakouts, which will lead to continuing outperformance for the rest of the year.
You know, before we get to the opportunities in the broader markets, the stocks which are breaking out, just quickly, as the Nifty remains sideways over the near term, medium term, what would be the broad range? You spoke about 18,900, 19,000 on the way up, which will act as a resistance. On the way down, where do you see the Nifty headed? Just so that viewers get an idea where to buy if the index heads lower.
Rima, for the last 1.5 months, I think our working range has been 18,000 to 19,000. Now, I'm not a big fan of ranges, but that's what is happening on the charts at this point of time. If 18,670 were to break, you could see a dip towards 18,200 and worst case 18,000. But broadly, I think the market is a sell closer to 19 and it's a buy closer to 18, not necessarily at 18, but closer to 18. But you know what we've been doing at Goldilocks, just ignoring the index. We're not even watching what the Nifty does on a day-to-day basis, and just focusing on stocks, sectors, and themes. I think that's really the best way forward, because 2020 and 21 was all about, you know, top down. You looked at the large caps, the headline indices, and that's where the return was. But things have changed.
So let's talk about those, bottom up themes. Tell us the sectors, the themes, the stocks that you like.
Well, firstly, I think it's been a rally which has seen frantic sector rotation and theme rotation. I think you've seen it in the last 3 months that there is one pocket which does well, and then it, passes the baton to something else. And that's the beauty of any solid bull market, that you have something, helping the market go higher. So as a basket, I think the entire mid-cap 100 and the small-cap 100 look good. In fact, our working target for the small-cap 100 is about 12,000, which is a good 13-14% away from current prices. But if you really want to look at pockets, I think textile as a pocket is coming back very strongly. We like cement as a basket. I think the Ramco Cements, the Ultratechs, the Ambuja Cements of the world, and some of the smaller companies as well. We have started to like fertilizer as well. Some interesting smart moves in the last few days. Auto ancillary, I think, is a very big theme. Look at the kind of winners that you've seen in auto ancillary and the entire auto pack. And the unlock trade, the Delta Corps of the world, the Indian hotels, Sapphire Foods, Devyani International, all of these themes, and not to forget industrials. That's really the big theme, which I think is going to stay from a 5-year perspective. I see a lot of my fundamental friends talking about it, and I think the charts are pretty much aligned to that view. So these 4 or 5 pockets which I mentioned, I feel have the best opportunities.
Okay, all right. Hi, good morning, Gautam. Tell us what a couple of stocks. I believe you have some targets on Rain as well as Rolex. Run us through that.
Yeah, so Rolex Rings, I think, is a company that we've really liked. We've recently covered it. We feel that it has the potential to be a big mover from here. Fundamentally in line, technically absolutely solid on the charts, smart money in it. So we like this stock. And obviously, Rain Industries was the darling of the market in the 2020-2021 period, then lost its way somewhat. But the chart setup, again, is very solid, and I see the stock also appreciating anywhere between 30 to 50%. So these are just few ideas, that we like to cover from time to time. But the entire structural story is to stay in the in the broader market, stay invested, continue your SIPs, and add on dips.
Gautam, great conversation, but out of time. Thank you very much for joining in. Need to get into a break. On the other side, we'll put the focus on commodities. Stay tuned. Welcome back. Let's turn our attention to commodity markets. Manisha is here with us in the studio. Hi.
Hi, and thank you so much for that. Well, I'm looking at metals as a sector because we're looking at a very mixed month of June, and there have been some positives as well, like China cutting interest rates and some of the economic data actually coming in slightly on the better side, including the US GDP numbers as well, and that has been supportive. The markets also have been taking support from the fact that you have seen inventories continue to decline, but even as we have seen consolidation, and even as most analysts would tell you that bottom perhaps is in place right now, the street is still waiting for China's more stimulus, stronger stimulus to support the manufacturing sector, the automobiles and the real estate as well. And until that happens, you will continue to see a very mixed trend coming in for the metal prices. Another number that was slightly disappointing was the new yuan loans at 1.3 trillion for the month of May. Estimates were 1.6 trillion, and that continues to weigh on as well for many of those base metal prices there. The markets in the meanwhile are looking at the higher rates from central banks. There has been a downward revision for the Chinese GDP numbers as well and forecast in sense of growth, and that continues to weigh onto the market too. In the meanwhile, you have the LME and the COMEX inventories which are trading at a multi-year lows, and every day any day that you see some positives coming in, markets start to latch onto this thing. Multi-year lows in sense of inventories. Zinc, if you look at that, the cost of production and the prices ruling into the markets are not too far away from that. Copper has seen nearly 10% of decline from its Jan highs. There are rains that have hit mining operations in Chile. And in Peru as well, we have seen new regulatory measures come in. So the mining is really not profitable anymore. So these are some of the concerns that are supporting metal prices in the street right now. If you look at the month of June, then the best of the moves or the gains have come in for the ferrous metals. So steel and iron ore should be on your screen because 6 to 7% of strength is what we have seen in the month of June. And copper is the best performing metal when you look at the base metals there. Almost 8% of gains coming in right now. But even with that, as I said, it's 12 to 15% down from its Jan highs. Not so much the case for the other metals. Zinc has been an underperformer. We've seen oversold positions is the reason it's trading 1.5% on the higher side, but not much to write home about when it comes to aluminum and nickel. We are closing month of June in the negative for this one, 3 to 4.5% of declines, as you can see for the current month.
All right, Manisha, thanks very much for that. That's commodities in focus. Well, you know, we're up 40 points in the Nifty, 18,728. So this is a decent start. Market breadth is very solid. Broader markets doing extremely well. We'll take a quick commercial break here, but it's the economy with Lata comes up next. She'll be chatting with Steve Englander of Standard Chartered Bank and Neeraj Gambhir of Axis Bank about the recent rate hikes by global central banks and the road ahead. Stay tuned.